Hi guys, Ken Chigbo, aka Ken FX Freak, and I'm back with another week roundup and look ahead to the key events. Now, starting off with the dollar, as we always do, look, a negative closure here for the month of July. And look at what we formed. Bit of an evening star to signal a change in trend, a change in momentum. Obviously, structure on the higher time frames been very much to the downside for the greenback. We had an opportunity to further push to the north after this big monthly performance in June. And that was on the back of, a hawkish FOMC back in June. But the record's changed, okay? The record has changed. So what did we see last week, actually? We saw a dovish FOMC, and that was comments particularly coming out of the chair, Jerome Powell. And he was just saying that it's still a long way to go in terms of getting the labour market back where it needs to be following the COVID crisis. And what does that mean? That means they're going to continue to pump. There's no tapering in sight for now, no clarity on timing. So dovish, dollar negative. And we formed a bit of a top area here. 1, 2, double top, neckline down here, 89.80. Guys, by the way, in terms of specific trade ideas and technical analysis, got a new community called Freak Financial Freedom. Check it out, Freak Financial Freedom. If you want to know more, go onto my Instagram and go into the link in my bio or DM me. So with that being said, obviously, we had this big head and shoulder structure of euro. So that neckline area, the psychological 118 mark, very much protected here. And what we could see, there's times when the head and shoulders doesn't play out and it gets to the right shoulder and it's just like, bing, off the neckline straight up. And that's exactly what we could see because the FOMC aren't tapering soon. We had an opportunity. Should have they been hawkish, this could have broken that neckline and just dropped hardcore down to sort of that 111.50 area, okay? I still like gold, by the way. I'm loving gold longs potentially here, okay? Remember this big flag structure here, breakout retest. Now the precious metal gold is thriving off the opportunity of the dovish FOMC and the fact that they're not tapering anytime soon. Remember, gold loves QE. So I'm expecting to see this push to the upside. Nice closure there in the green for the week as well. Been consolidating, but expecting that nice breakout to the upside. A quick outperformer for this week as well has been GBP. UK economic reopenings have been great. And with that being said, we've been seeing a drop in the COVID cases, which is very, very encouraging there. So expect some further outperformance for GBP. A lot of demand here at the psychological 139. I want to see 140 certainly challenge this week. As I say, specific trade ideas and entry points, etc. Check out my Instagram and go to the link in my bio, by the way, guys. Keep an eye on AUD this week. AUD's been a bit of an underperformer because they've been in lockdown. RBA this week, the rate decision, which I'm expecting them to be dovish, which could force a further underperformance for the Australian dollar because they're in lockdown. So the RBA have to be dovish. What else am I looking out for? I'm expecting a breakout from stocks. We've been consolidating. Remember, stocks love QE too. The Fed aren't tapering anytime soon. So I want to see a breakout from this flag structure, and I want us to see new highs this week, all-time highs, push up to sort of 35K and well and truly beyond, mid 35,000 region. But as I say, for specific trade ideas, guys, check out Ken FX Freak or Real Ken Chigbo at Instagram and go to the link in my bio. So expect that dollar downside to resume this week. Unfortunately, the bull run may have come to an end following dovish FOMC comments and a change in tone. But guys, with BluFX as well, if you do want a funded trading solution, that is an amazing one. There's no conflict of interest, one of the best out there, if not the best. And it's going to help you become an all-rounded trader. Have an amazing week. Let's get it.